Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 181 for Monday, 14th of April, 2025. I hope you're all well. I hope that you've had a good weekend. I hope that you're ready for another interesting week ahead. As always, just to confirm, okay, that whether if you're joining us for the live session or if you're joining us on the YouTube live stream, just confirming that you can hear my voice and that you can see the slides. That would be appreciated. The Monday market update is literally just that, okay? It is just me flying through as much as I can fit in the next 30 minutes, looking at strength and weakness within the FX markets, also looking at some charts of interest, and then having a look at the particular live markets. And so it's a case, as I said, it's not a trade signal service. It's not me giving recommendations. It's just me sharing what I am looking at myself. As always, you are just very welcome to use it for your own insight. Just one little bit of housekeeping. We will return in 2 weeks' time. Okay, next week be Easter Monday, so there'll be no Monday market update next Monday. We'll return on the 28th of April. As always, you're very welcome here. Just remember that you're always responsible for your own trading decisions. And if you want a little bit of help and support with your trading, the VTP tag, the Trader Accountability Group, is up and running, okay? And you're very welcome to join that if being part of a group that would help just hold you accountable and help drive you forward in terms of getting rid of bad habits and making sure that you're doing the right things. Well, then that might be the group for you, and you can join that. There's a bit.ly code there or the QR code there if you're of interest. For those of you who want a little bit more education today, I will be doing the ActivTrades Monday Market Matter webinar at 2 o'clock London time. Today, we're going to talk about how to trade price action combinations. That is the sort of the presentation that I gave at the IX Trader show in London a couple of weeks ago. So I'll be redoing that. So if you were there joining us for that, then hopefully you'll be able to rejoin us for that and be able to see it again. As always, you can register on the website or use the QR code. And as usual, I'll be doing a Wednesday evening Market Pulse weekly update for Admiral Markets. They're just looking at global indexes, looking at the dollar, and then looking in particular at sterling and UK stocks. If that's of relevance or interest to you, then as I said, 7 o'clock London Wednesday evening, and you're welcome to join us there. All right, okay, let's dig into the main thrust of our element here. So I appreciate if you're new to trading or if you're new to joining us, this might maybe look a little bit overwhelming or intimidating, but it's actually it's relatively simple to get an understanding of what it's telling us. Okay, it's just bits of my own model that every weekend I look to do. Okay, on VTP stage 2, which is just looking at the STAM to identify where's the strength and where's the weakness, primarily within FX markets, but then also indices and commodities markets, in an effort to help me sort of prioritize my time, energy, and resources as more effectively for the week ahead. So what's this telling us? Well, where are we? Well, here we are. We are into week 16 of the year for the 14th of April. Well, where's the strength and where's the weakness? Well, for the second week running, we hold Swiss franc still at the top of the pile with Japanese yen there in close pursuit. So you've got Swiss franc and Japanese yen at the top of the pile. That is an indication, okay, that we're in a risk-off environment. That shouldn't really come as a major shock to people based upon what we've been seeing in the last couple of weeks of the markets. However, having said that, we had a little bit of a relief rally on Friday. Some of the US financial stocks did okay. All right, they did okay. They started releasing Q1 earnings. Okay, a lot of them did okay because of the volatility that's come back into markets in Q1. There's That's a shocker. And invariably that was reflected with also some of the comments about removing certain elements of tech from tariffs, or them sort of, I think Trump's now call it going into a different bucket. Make of that what you will. So there was a little bit of a relief rally over at the end of the week and this weekend. Okay, certainly when markets reopened, it wasn't in the kind of same sort of volatility that we saw last weekend. Okay, and that was reflected there, and you can see in that sense also a case of, in terms of, since we opened last night, well, actually it's been a little bit of a risk on. All right, a little bit of a risk on environment this morning. Okay, certainly in terms of Kiwi and sterling, we'll look at them later, but then Swiss franc and yen, okay, just had it, and I think that is just an indication of, people are a little bit they're a little bit what's the word, a little bit of a tariff fatigue, shall we say, and that's how it's shown. But the big picture is still that we are still risk off, and you can see, that's reflected also by how dollar has kind of finally sort of, slumped it into the bottom of the STAM from being, at the top of it at the start of this year. Aussie still remains okay, bottom of the pile there. Sterling weakens again, so from being top a couple of weeks ago, we're down now to fifth. That's not a massive shock. I mean, yes, we did have a bit of an interesting session this morning. All right, but as I said a couple of weeks ago, okay, it's the sterling was ready to roll over and has done that. Euro holds its own, all right, but you can be as excited about that as you want. Of course, in terms of what we've got news coming this week with UK, well, we've got jobs numbers in the morning and then CPI Wednesday morning. All right, they'll have an interest. That will have an impact on that. Okay, in terms of how markets perceive the kind of trajectory for interest rate cuts in the UK, and then also on Thursday we've got the kind of ECB policy statement, and most people are still expecting another 0.25% interest rate cut from the Europeans there. So maybe that'll have an impact in sort of dampening some of the euro strength that we've seen over the last couple of weeks. Interestingly, we've seen Canadian dollar start to move up a little bit, and even Kiwi dollar. Kiwi dollar has kind of moved off the bones, all right, the bones of its backside and stuff, where it has been for most of the last few months, as you can see there. And as I said, it has started the week well, but as I said, I think that's just a little bit of a relief rally. I wouldn't exactly be getting terribly, wouldn't be getting too excited yet. What is interesting is that you can see in sterling and euro, the STAM environments are changing from here where we were, okay, a couple of weeks ago, where sterling and euro were just really strong bullish. Now that that has changed, you can see that there's lots of selling environments there, okay, and even on the euro, okay, it's starting to sort of drift a little bit. It's giving us an indication of the kind of shifting sands. When we look at the indexes, the major American indexes, okay, the major three, they are still in strategic sell, even though, we sort of kind of had, as I said, a bullish end to the week. It's all relative, isn't it, really? It's probably the most volatile week we've had in a long time, but, we still got a source of a bullish end to it, and we'll look at that in a moment. DAX remains a tactical short. FTSE remains a strategic short, even though it's kind of, it rode the back of basically a little bit of, as I said, that kind of index relief rally, and also probably a bit of sterling weakness. Gold, well, we've said for weeks, gold remains a strategic buy, okay, and last week was a shocker of a week in terms of looking at how that price action there. Silver had a really very volatile week. Bitcoin still remains a tactical short, okay, but I think there's a flip there, and the VIX came down, but it is still in kind of in a kind of bearish mode in terms of how I look at it. So, yeah, we're mostly still risk-off environment, but there has been relief rally, and there has been a little element of shifts and moves this morning, okay? And of course, we're kind of a strange because we do have, as I said, we just said, talked about kind of European and sterling data, but there is some Canadian data, and there's also US data, and we've also got Powell speaking. I think he's speaking Wednesday evening and stuff. So It's going to be an interesting week because, of course, it's a shortened week. Friday markets will be primarily closed as we go into the Easter weekend. So, it's going to be an interesting one to see, what kind of volatility we're going to see this week. Or is it a case that, everybody's just had enough of it? Everybody's stayed up late watching the Masters, and basically people are now on holiday and nobody's interested. I'm probably being a bit flippant there, but, ultimately there are still humans involved, and they'll play this as they see it. Okay, so that's what we're looking at there. Let's have a little look at some charts of interest. Boom. Okay, so here's a few of the charts of interest. As I said, Friday we started the Q1 earnings, and we had a lot of financial companies there. Okay, so we had JP Morgan, there was I think Wells Fargo, I think there's BlackRock, Bank of New York Mellon, Morgan Stanley, and for the most part, they were okay. They might have missed one or two numbers, but in the generally what we're seeing was that there's lots of volatility because of the the world we live in now. So Goldman Sachs today are supposed to be releasing before markets open today. This is the weekly chart. Okay, what am I interested in here and stuff is that from here, this was the kind of the reversal here at $300, and we went into a nice weekly uptrend there. Okay, and we've had where that 20 period moving average acted as kind of nice support, and then basically what happens here is we get to these highs and then we end it with a nice bearish engulfing candle, a nice bearish key reversal candle. All right, price pushed to a new high, but it rolled over and closed beneath the low of the previous candle, and then you can see where we dropped back down to 50. We have that kind of pullback, which was like a bear flag. It was bear flag on the indexes, bear flag across lots of stocks, and then you can see we dropped for a couple of weeks, and then as I said last week, despite starting off and selling off, we actually had a bullish close, all right, just underneath $500. But we're looking at that. The pre-market has it above 504 opening up, so there might be a little bit of gap up. That might be also taken into account that news there. Let's clear this down. My scenario would be looking at a drift back up to the 50 period moving average, okay, into this area here. Maybe by then the 20 comes down, and then it's a case of, I'll be looking to see that. Is that a case that, if we form rejection candles there, that would be for me, another lower high. So, that would be my first scenario would be drift back up into that sort of 530 to 550 region, and then I'll be looking to see where that does. If it rejects it and rolls over, that would be a short for me. That's how I look at that. We've also got Bank of America. All right, Bank of America here on they've got earnings tomorrow. All right, tomorrow before open, and in some ways not massively dissimilar, as in we all reversed around here. Okay, so $25 there. Okay, is the low. We all had a nice sort of year, 18 months for the most part of a strong uptrend, but unlike Goldman's, okay, which ended with that bearish key reversal, Bank of America, okay, here I look at that as a double top, and then we got the real strong sell off, which to me closed beneath the 50. So we've got a double top followed by a lower high, followed by a bearish close beneath the 50, which we hadn't been beneath. All right, for what's that, about nearly 18 months. Okay, so that in itself is telling you something. And then, as I said, we had that kind of what was a kind of a bear flag. Couldn't really get a back up above 50. Came down, fell away. Now the thing that interests me here is that for me, that wasn't as bullish a close, okay, as let's say Goldman or a few of the other banking stocks from last week. If anything, I would look at that as a bit of a kind of a high wave indecision kind of, and maybe maybe today's momentum and tomorrow's numbers, maybe that gets it pushing its way up to the sort of the weekly 200 period moving average. Look at it, see how it's acted as support the last two times it's been there. Could the scenario be that it pushes it up, and then I'm looking at, does that act as resistance there? Okay, that's what I'd be looking at. That's one scenario I would be viewing at in terms of how I would be watching to see how this particularly plays out. And then here we go. Generally, having just looked at a couple of those finance stocks. Okay, well, this is XLF. This is the financial sector ETF. And it's always what you want to be seeing, that the ETFs and the big major players, the charts aren't massively different. Okay, that morning star there. Okay, back in October 23. big uptrend, supported again by big numbers and the 20-period moving average there, okay? And then a bit like Goldman's, we pushed to those highs, and then what happens? We print a bearish engulfing candle, a bearish key reversal candle. And then price does that bear flag, and this is beautiful in the sense that this was the short for me in terms of prices. Yes, it's put a bear flag in, but this is just a confluence event here. This is what I tried to get across to traders. This is a confluence of events. Okay, we're back up against the big round number. We're looking to flip it from support to resistance. It's there. You've got a bearish, a really very nice bearish rejection candle, pin bar candle. You've also got PO20 there. The 20-period moving average is now flipped from being support to resistance. That is. You've also formed a lower high. It's a confluent event. That's a sell. All day long. All right, okay, all day long. And as you can see, the next week we did drop bang. As I said last week, interestingly, we closed back up above the 50. That was that kind of Friday relief rally, which we'll look at in the live markets in a moment. But that was the sell. Now you're just looking to see, okay, can this week, can it stay up above the 50? What will the financial earnings numbers be like this week? Will that basically hold us above there? I would say if it holds back up above the 50, that is. I might not necessarily say fully bullish, but I would be tentatively just saying that we've kind of washed out there for a bit, and what might happen is we might just get a bit of sideways action for a month as let's say as the kind of tariff fatigue sets in, and everybody just basically waits to see what the real score is. And the final chart of interest for today is Netflix. They've got their earnings after close on Thursday before we go into that weekend. Listen, that's a nice chart. Netflix, it fell away in the post, let's say the post lockdown reopening. Netflix fell away, and that's when they came up with their plan that they were no longer going to let people share the logins. Everyone had to buy their own login, and people wondered whether that'd be the end of Netflix. But to be fair to them, I was a bit skeptical. But actually, it is basically, it's worked, all right, and we can see that has been in quite some trend, right, hasn't it? Quite some weekly trend, okay, just working its way up there once again. 20-period moving average active as kind of support. And then, we got to $1,000, big round number, $1,000, got up there, bearish inside bar, false breakout, back down beneath the 20, pushed up. It was a little bit like what we just looked at on XLF. We pushed back up to that big round number, didn't we? All right. That is, it's a bearish rejection candle, it's a lower high. We've dropped away now. As I said, we kind of pushed. We haven't been beneath the 50. We kind of had that relief rallies a little bit higher, and you can see the pre-market is pushing us up there. I will be interested to see how that plays out this week as we run in towards the earnings. It'll be interesting because the earnings are coming after close on a Thursday, and then basically most people will be able to digest that over the long weekend before they get cracking into it. But people are waiting to see whether this was the kind of capitulation and we've pushed back. And can we push our way back up to 1,000 to new highs? And that's Netflix. But I'd suggest just looking at the financial stocks and the indexes we're going to look at. That's what pretty much everybody's hoping for. Everybody's hoping that was kind of a tariff tantrum and it's washing its way out. We shall wait and see, won't we? We shall wait and see. Okay, so there's the charts of interest. Let's switch across to the live markets now and see what they're playing out. If you just bear with me a moment, we'll switch across to the live markets and have a look at them. So, stuff here. Okay, so I am hoping that you can still hear my voice. I'm hoping that you can see the platforms now. Okay, so this is, as usual, where we start indices platform. So this is a Dow on the weekly, Nasdaq on the weekly, S&P 500, Russell on the weekly, oil on the weekly, DAX, Nikkei, and UK FTSE 100. So you can see for yourself, we talked about had that kind of, having sold off, we had that kind of little relief rally, back up above 40,000, we closed there, okay. NASDAQ, we had that kind of relief rally, bullish close, back up above, 18,000. S&P did the same, okay, back up above 5,000 close. Russell didn't follow through as strongly, but it was still that kind of, that kind of move there. And we saw that flow through to the DAX as well. Okay, DAX stayed above 20,000 and the weekly 50. Even the sort of Nikkei bounced off the 200 there. And the FTSE, as I said, kind of was above 8,000, and today it's been about 8,100 and stuff. So that was that kind of relief rally. And as I said, last night wasn't as volatile as we expected. So last Sunday night, I was there from about, I think it was there from about 10 till about 1 in the morning, just watching it all play out, okay, and looking at how everything's going. Last night, kind of I equipped myself with Portland cheese to watch through it, and I lost interest pretty rapidly when I saw that invariably, we weren't going to be getting the kind of big sell off, or anything like that. I suspect, as I said, what we've seen is that we've had a little bit of gaps up, a little bit of risk on relief rally. Well, maybe relief rally, wouldn't necessarily just go all in on risk on. We'll see what happens there this afternoon, okay, how markets react to the open. But you can see that last week was a pretty it was a bullish close after what was an enormously volatile week. Now, as I said, when we're back in 2 weeks' time, maybe we'll have a bit more insight as to whether that's the low, or whether this was just a bear market rally. We shall wait and see. But you can see for yourself what's going on there in terms of the moves there. When you look at the commodities, oil having pushed beneath 60, it closed back up above 60, and that, I'd call that a bullish rejection candle, false breakout of the big round number 60. So, is that it also gives us an indication that maybe people are starting to think there's a bottom in on that. Certainly when you look at gold is the kind of interesting look at that for last week. The week before, we'd looked at basically as bearish, and we'd come back and retested 3,000. When we go down to the daily chart, we had a real strong sell-off there. And, we had an inside bar, pin bar up above the 50. And I think I'd said last week that, that coming back to the 50 would be the kind of the true test. Would it hold? Would 3,000 hold, or would it break? And boy, did it hold, and did it reverse? Okay, and a lot of that I think is probably just something to do with some of the excuse me, some of the shenanigans and magic moves we saw in not just US Treasuries, but even here at the UK in gilts, okay, and elsewhere. There was some absolute volatility and shenanigans going on in yields, which probably frightened the living bejesus out of people. And you can see how they responded. Okay, maybe this was all part of a coordinated plan by people, but I'll leave that to others to discuss. But ultimately, that just reversed its way, and I've been watching it because here, this is the 4-hour chart. We'd put in a kind of a bit of a bullish rejection kind of pin about the start of the week of 3,000. We came back down to retest it, and I was looking at here. We tested those lows, and then we came back up here, and I was looking at this is kind of like a morning star here. This is a really bullish engulfing candle, bullish key reversal candle closing above 3,000. This is a chance to take a small tactical long. I did not expect it to rally as madly as it did. That was just quite some maneuver there, isn't it? Just quite some madness. Silver was also volatile, but without the kind of push to new highs that you saw from our gold. You can see the week before we'd really fallen apart and closed beneath $30, and then we basically reversed a good part of that. You can see if I go down to the daily chart, there's a real V-neck back up above 30, back up above the 200. Now, really, for it to be bullish, it has to get back up above the 50. And for me, silver has real industrial usage. So, if there's people buying into that, that is to me a sign that people are sort of, people are getting comfortable with what's going on, all right, and they're having to get on with it. So, yeah, that was a volatile week, wasn't it? I could talk about that for days and weeks ahead, and I'm sure there are lots of people already doing that. Ultimately, we're like saying, well, okay, how's that going to play out this week? How is that going to affect us this week? Where are the opportunities are for us? And so, as we've seen that volatility there, we also have seen it in certainly in the dollar as well. Okay, we've seen I've got so many packages running these days and stuff. I've got more trading and chart packages than you don't know what. But anyway, here we are. This is my dollar. Okay, so this is my dollar and dollar profile. So Aussie dollar, Euro dollar, pound dollar, dollar Swiss, Kiwi dollar, dollar CAD, dollar yen, dollar index. Okay, so dollar index, bang. You can see it just literally it really collapsed its way last week. Okay, we've gone from in the second week of the year tapping 110. Okay, those of you who join us every week until basically last week closing right beneath 100. That was just quite some move. Then you can see that kind of sell off there. And there was a bit of a continuation there today. If we go down to the daily chart, that was last week. It's just real. But look at the size of the candles compared to what you're normally dealing with, and just literally bang, you can see boom, 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 has gone down. That dollar weakness, and so no surprise that the dollar's maintained. It's gone from being top of the stand to bottom of the stand. But as I tell the stage 2 traders that's just the way it goes. When you're at the top, the only way is down. When you're at the bottom, like Kiwi dollar has been, the only way is up. But you can see there is that it's a bit too early to see if that's a double bottom there. Okay, with 99 and stuff. I'd say there's a bit too early, but clearly what I'll be expecting this week is I'll be expecting a retest of 100. That's where I'd be looking at, a retest of 100, and what does it do? But that's what I'd be saying. There is still a gap there that hasn't been filled. All right, and on my charts, and so I'll be looking at up to 100. That's what I'll be looking. That would then be starting to look at like a bit of a double bottom, a bit like here. Okay, a bit like here, a version of what you had here. But that wasn't the bottom, was it? It was a nice relief rally. Okay, and that in itself was a move, but it was. Look, here we go. Let's just draw this on. That in itself was a little bit bang, like a counter trend line break. It was a bear flag, wasn't it? Okay, as we just worked our way down there, but. Clearly that is weakness in the dollar, and that's what we've seen here. So bang, even Kiwi dollar last week strengthened, Aussie strengthened, okay, Euro strengthened, sterling is we'll look at that also around a bit. Okay, bang, dollar weakened against Swiss franc, weakened against Japanese yen, risk off, and then even against Canadian dollar. All right, so you can see dollars, drop into the bottom of the pile there. That's not a shock. You can all see that, okay. And the question will be, will it this week continue? Does it continue to make new lows, or does it come down here and double bottom? And that's what I'll be watching on the dollar for the next few sessions. All right, so let's have a little look here at Kiwi dollar, because as I said, Kiwi dollar's been at the bottom of the pile. But you can see here, this is Kiwi dollar, Euro against Kiwi, pound against Kiwi, Kiwi against Swiss franc, Kiwi against yen, Aussie against Kiwi, Kiwi against CAD. So you can see the last few days, Kiwi has strengthened against the US dollar. It has even strengthened against Japanese yen, and sort of against the Swiss franc, okay, in that sense. So even in a risk-off environment where Swiss and yen are at the top of the pile, the Kiwi has managed to sort of hold its own. It is kind of, strengthened against sterling. Okay, interested to see if it carries that on against the New Zealand, against the 50. It has even, it bang, bearish key reversal followed by, it's kind of a 1, 2, 3 top against the Euro, even against Aussie against Kiwi. All right, and it's strengthened against the Canadian dollar. So there has been a little bit of, as I said, that's a little bit of a relief rally that's gone on. The question is, can it maintain that? Okay, is that giving us a hint that basically, people have just absorbed the madness and are just basically just gonna work with it? Is that what we're going to see there? So, as I said, maybe watching Kiwi this week might be a good indicator of of how people are feeling. All right, let's finish with sterling. All right, let's have a finish with the sterling, see what's been going on here. Okay, it was a mostly bullish session this morning for sterling, for those of us who are intraday guys. So here are the sterling pairs on the daily. So pound against dollar, euro sterling, pound Aussie, pound Canadian, pound yen, pound Swiss, pound Kiwi. All right, so FTSE is just literally on the intraday is just mostly just hovered around, pivoting around 8100. Okay, nothing really to get too terribly excited there. Cable. All right, let's bring that chart up, because that's probably a great indication of the volatility that we've seen there, isn't it? We batted our way up through 130, we came back down to the 50, and now we've batted our way back up through 130. that has just been in that range, all right, for the last couple of weeks, and what a range it has been. Okay, so that has been an indication of sterling strength and sterling weakness, dollar strength and dollar weakness. Okay, and that has just played its way out there. What's interesting to me is that with all that volatility last week, we still managed to print a bullish key reversal on the daily pan against the yen. Okay, that was kind of intriguing to me. Okay, and it's kind of looking at that, we did also against the Swiss franc, but the Swiss franc is the strongest at the moment. You can see how it just basically worked its way through that. Pound against New Zealand dollars, we've just looked, all right, on the daily chart, we've worked our way down. Does the 50 hold? Even pound against Aussie, okay, we printed a bearish, engulfing bearish key reversal. Is that basically showing us what we're going to do? Pound against Canadian dollar, we've fallen away to 180, right? So yeah, sterling is strengthened against US dollar, but then everybody else has. It is holding its own against Japanese yen, okay? But as you can see, it's still weak against the euro. It's still weak against the Swiss franc. It's weakening against Aussie. It's weakening against Kiwi. And it's kind of just sort of, playing to its own tune against Canadian dollar. So it's very mixed. It's no surprise that it's slipped down from being top of the STAM to being, fifth out of eight. Okay, that in itself is telling you, all you need to know is a very mixed picture for sterling at the moment. So, you just watch yourself, we just watch what it offers up for you. And as always, you just look to try and identify where's the strength and where's the weakness. Maybe we will see over the next couple of weeks, maybe we'll see sterling and dollar sort of move to the bottom of the pile, which, having been at the top of the pile, is interesting, okay, and gives us some insight, but we'll have to wait a couple of weeks to see that. Okay, there you go, ladies and gentlemen. Let's draw it to a close there. I hope you found that useful. I hope that's given you a little bit of insight that you can take away. As I said, remember, it is a shortened week this week, okay? So that will have an impact. And we will not be here next Monday. We'll be here in 2 weeks' time on the 28th, okay, for the next Monday market update. In that time, I hope you have a couple of fabulous trading weeks. I hope you enjoy the Easter break if you're taking one. And I'll look forward to speaking to you soon. Take care, everybody. Cheers. You're welcome, Robert. You're welcome.